Hi, I'm the Brazilian investor, literally from Brazil. Today's video is about Klabin. Esqueci que sou brasileiro. Klabin. We're going to talk about its fundamentals, strengths, weaknesses, and my personal opinion about the company. But before we begin, a quick disclaimer. This video is for informational and educational purposes only. It's not a stock recommendation. I'm not a licensed financial advisor. Do not make your investment decisions solely based on an amazing YouTube video. Do your own research or consult a certified professional before making investment decisions. Today, I want to introduce to you a company with more than 100 years of history. In other words, a resilient company that has gone through many economic cycles. One major competitive advantage of Klabin is its integrated, diversified, and flexible business model. That happens because the company owns a large amount of planted pine and eucalyptus forests. From its own forests, the company produces pulp. Part of the pulp is sold, representing approximately 45% of the company's EBITDA, is that how you pronounce it? Anyway, which is basically the operating profit. The other part of the pulp is used to manufacture its own products. In addition, Klabin also purchases paper scraps, which the company is able to recycle and use to produce new products. Klabin has 22 factories distributed across 10 states in Brazil and also in Argentina. A shout out to our hermanos. So you can see that the company has a strong presence across multiple regions. Furthermore, Klabin owns a total of 911,000 hectares of planted area, of which 669,000 hectares are owned land. Let's do a simple and even conservative calculation. 669,000 of hectares times 30,000 Brazilian reais per hectare, which is approximately the value of 1 hectare of land in Brazil. This alone gives us about 20 billion reais, approximately $4 billion. And if you look at Klabin's market value today, it's around $4 billion. In other words, Klabin's stock market value is basically equivalent only to the land it owns. It's as if the company's manufacturers, its brand, and its strong market share were not reflected in the current share price. So, from this perspective, and considering this hidden value, Klabin appears to be quite undervalued. Another key advantage in Brazil is our high forest productivity, good land, and Klabin has one of the highest forest productivities in the world. This is a huge competitive advantage because Klabin's trees grow in 6 to 8 years, while in other countries, growth can take anywhere from 15 to 30 years. Here we see that Klabin's portfolio includes pine and eucalyptus forests. The company also purchased recycled paper for use in new products. This raw material is used both to sell pulp and to produce paper and packaging products. A technical curiosity about the efficiency brought by new projects is eucalyptus. This is a type of fiber derived from eucalyptus, a tree that requires less planted area. In other words, Klabin can now produce more using the same land it already owns. Eucalyptus also grows faster than other trees, which tends to generate higher returns due to increased production in a shorter period of time. Now, I would like to show you a slide from another Brazilian company, Irani, to highlight that the Brazilian package market moves 165 billion reais. And note that the market in which Klabin operates represents 35% of the total package market. Additionally, the corrugated cardboard package segment grows faster than Brazil's GDP. This is due to the replacement of plastic with paper, strong growth in e-commerce and delivery, and also growth in the food industry. Klabin's revenue is diversified, and the company has been actively increasing diversification and adding more value to its products. It also has a strong share of the Brazilian market: kraftliner 60%, paperboard 40%, industrial bags 50%, and cardboard boxes 22%. Notice that nearly 70% of sales are to the food sector, while 13% go to the consumer goods, 12% to other segments, and 8% to construction. As you just saw, the main destination of sales is the food industry. This segment has been growing in Brazil at an average rate of 10% per year. Consequently, if this growth pace continues, the company should benefit from this cycle, not to mention the growth of other products, which range from 2 to 12% annually. Klabin has been working to become more flexible and to produce what brings the greatest efficiency to its results. In addition to product diversification, Klabin also has geographic diversification. About 60% of revenue comes from Brazil, followed by Italy, China, Argentina, Mexico, the United States, Saudi Arabia, France, and other countries. So, part of Klabin's revenue comes from foreign markets, meaning that part of the company's revenue is dollar denominated, not only in Brazilian reais. However, even with all this diversification, the company is still impacted by pulp prices, which are currently low. This also helps explain the drop in the stock price. Another reason for the stock price decline is the company's debt and the revision of its dividend policy. The company adopted a new policy to keep leverage controlled between 2.5 and 3.5 times the EBITDA operating profit. Outside investment periods, during investment cycles, leverage cannot exceed 3.9 times. In the long term, this is a sensible decision, as it reduces the risk of aggressive investments followed by negative sector conditions that could severely hurt future results. However, in the short term, it means lower dividends, since the current focus is to distribute less and reduce debt. Previously, the company paid between 15 and 25% of EBITDA, I don't know, as dividends. Now, it will only pay between 10 and 20%, currently around 15% of EBITDA. Speaking of debt, the outlook is for a sharp reduction in leverage. The current level is about 3.9 net debt to EBITDA, meaning it would take roughly 4 years for the company to pay off its net debt using operating profit. This higher level occurred due to investments in a new factory. When we analyze the debt amortization schedule, we see that Klabin's cash position of 8 billion covers 3 years of debt. So despite the elevated leverage, the company's risk remains low. Among other factors that will help reduce debt, we have lower capital expenditures. Over the next few years, projected investment levels are declining. If this holds true, the extra cash can be used to further reduce debt. In fact, investment levels have already been falling. In the second quarter of 2024, the company invested 858 million, while in the second quarter of 2025, investments fell to 649 million. In the results of third quarter of 2025, I'll make a video about this later. We can see that investment levels decline even further. The Puma II project has already been completed, and the company no longer has investment expenses related to it. Investment expenses. In addition, most of the special expansion projects have also been completed or significantly reduced. Moreover, we can expect revenue growth from these past investments that are now being finished. The company has basically shown growth in profits and revenues year after year. Even with the recent drop in pulp prices, it has managed to keep revenues at high levels. This drop also affects ROE, return on equity. But we can see that despite some volatility, ROE also goes through growth cycles. Perhaps this is why company executives have been buying Klabin's share recently. Falling share prices, rising profits, and potential improvement scenarios ahead, such as stronger dollar, which historically tends to rise against the Brazilian real, higher cash inflows due to increased production from completed projects, and more available cash from gradual debt amortization. Of course, all of this will not happen at once, but one sign that this promising future may be coming is precisely these share purchases. At the end of 2024, There was selling by executives. Now, controlling shareholders are taking advantage of these price drops to buy more shares. And finally, Klabin is a good dividend payer, having failed only in 2020 due to the pandemic. In other words, if everything goes well, dividend growth is also expected. I mean, yeah, nothing prevents the company from entering a new investment cycle, which could reduce dividends again. But at the same time, they would represent another growth phase for the company. Thank you for watching. If there's another company you'd like me to cover, let me know in the comments below. Don't worry, Thomas, Susanna's video will be posted soon. I'm reviewing it. Well, the channel is just getting started, so there's a good chance I'll see your comment and feature your idea in an upcoming video. So let me know what you're thinking. See you next time. Brazilian investor, literally from Brazil, with facts, not samba. Muito obrigado, forte abraço e até a próxima. Perhaps, 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 perhaps.